Good morning once again from Silicon Valley. This is Marco Marinucci with another Mind the Chat and with Mind the Bridge. Today in our deep dive on the MENA region, we're gonna go straight into the analysis of Islamic finance with one of the major operator in the region. And with us, we have the pleasure of having Abdulaziz AlMarzooq, the CEO of the Kuwait Finance House, KFH Capital. Good morning, Abdulaziz.
Good morning, Marco. Very nice to meet you.
Same here, and I guess it's actually afternoon for you. But our chats are very international by nature, so we have people in very different time zones. So it's great to have you. I think today the topic again is under the umbrella of all our discussions into the innovation ecosystem of the MENA region. And we're very pleased to have you here and pick your brain with some of your views into the market, obviously the innovation ecosystem as a reference, but also more generally speaking, considering also your position, the opportunities of investments. And probably I would start with a little description of KFH as a group, a little bit of its history, the lines of business, and where you sit as KFH Capital.
Sure. Well, KFH Capital is part of KFH Group, which is the Kuwait Finance House Group. It's the one of the largest financial institutions in the region, operating under the Sharia principles. The KFH was started in the 1977 as probably the second Islamic bank in the world, after Dubai Islamic Bank. And from that start, started from just a retail banking operation, and then it fanned out to be a global brand and a global name in the Sharia compliance or Sharia and Islamic banking, everywhere. So it's whether it's in Turkey and Malaysia or Bahrain, obviously here in Kuwait in the GCC region, and also funding and financing projects worldwide, whether they are in the region, Asia, MENA, Europe, or the United States. Investment activity is a major component of the KFH group, and we oversee this activity, and we operate through different asset classes and different spectrums, whether it's real estate, venture capital, private equity, or marketable equities, plus investment banking activities.
A little bit of your background. You studied in the States. Give us a little bit of how did you get to the position that you're in today?
Sure. I went to San Jose State University. I got my undergraduate degree from San Jose State University. Right after that, I came back, started my career. I started my career as an equity trader, and then moved up into the real estate and then to private equity. And then I did my master's in London Business School. So it kind of gave me a good perspective when I was doing my undergraduate school on the venture capital world, and being in San Jose State University, which is in the middle of the Silicon Valley, gave me a lot of appreciation of the VC ecosystem and the value of a startup, and where how big can a startup be, no matter what it is. It was a very good insight for me when I was there as a student.
Indeed, when you see when you're surrounded by the effects of the companies that were startups 5 years before, and now they have big buildings, I think that's very impactful in everybody's eyes. Very true. So going back to KFH Capital, what are the major objectives of KFH Capital?
KFH Capital manages the investments on behalf of KFH Group and on behalf of KFH Group clients. So we work through multiple disciplines, mainly real estate, private equity, and investment banking, and plus brokerage, trading activities, and asset management as well. We focus each discipline to where we have more experience in. So, for example, real estate, we operate locally, regionally, and internationally. International real estate mainly in the US and the UK. The private equity and venture capital is mainly in the region, with some activity outside the region, mainly in the US. Marketable securities brokerage is more regional than international. So we operate through different disciplines and through different asset classes, just to serve where the clients want to invest their money.
Can you give us a sense of the size of the activities, number of people working there, maybe assets under management, or any form or measure?
Sure. In terms of assets under management, we're about $5 billion in assets under management across the different asset classes. We have about a little under 140 professionals across the different disciplines. We focus on developing our internal resources and human capital as well, in terms of getting our colleagues. We make sure our new entrants get their on-job training and get most of their knowledge from the work they do, rather than opening text and going to seminars, which are helpful, but that they don't get the experience from just going seminars and reading books.
Yeah. And do you have offices outside of Kuwait?
We don't have an offices for KFH Capital, but sometimes we utilize the parent company offices wherever they are, whether they're in Turkey or Malaysia or in Bahrain or anywhere else. Or sometimes we utilize the offices of different partnerships that we have across the world.
Yeah. So let's talk about more your specific activities in the world of startups. Obviously, this is our main core focus. So maybe can you give us a little bit of a description of what you guys do in terms of on the investment side, and maybe also on potential partnership or integration that you can see in the startups, in fintech or in other disciplines? Sure. And then we can talk about more of the details of the VC fund.
Sure. We started the VC activity back in 2008. So we established a VC program back in 2008, and it was a general VC program. It wasn't specific to one industry. It wasn't specific on fintech nor health tech. It was a general VC program, and just following wherever an opportunity is, and where the technology trends are going. Ever since, that program kept growing and growing and growing. And at the same time, the regional VC activity at that point in 2008 was pretty much non-existent. There hasn't been much of a VC activity. People had some, I would say, not so good experiences before the dot-com bubble in the late 90s and 2000s. So they poured a lot of investments into startups outside the region, and unfortunately with the dot-com bubble, that investment did not return. So it was very difficult to settle the idea of establishing a VC program, let alone funding startups. The funding startups started to pick up in, I would say, late 2010s, where people just started establishing a company to do a certain service utilizing technology. And I think that took off with the introduction of smartphones and let's say the foray of application developments across the world. So that, I think that helped and made starting up companies in the region much more easier, and it kind of encouraged entrepreneurships and people to come in and pitch for ideas, if not replicating what's already existing in the international market in the region. So in 2015 or 16, we started a program in the region where a few deals made the headlines and people started to appreciate the startup in the VC world. So we established a program aimed to fund startups in the region in different disciplines as well. And up to 2018, we established a small program that invests in fintech company startups worldwide.
So just understand the steps. So 2008, very early, as you mentioned. How large was the fund when it got started?
Well, when it was started, it was about $50 million in 2008. And in 2012, we saw that the program proved to be successful somehow. So we requested an increase of the program from 50 to 100 million, and we got the approval on that. And then the regional VC program is much smaller given the market size. Right. So I think it's in the neighborhood of $6 to $8 million only.
Got it. Those are two separate funds, I assume. One is the first one is an evergreen fund, or is that a
no? No, it has a term, and I think the term of that program just lapsed.
Got it. And so the first one had a more of an international focus, I assume, right? The one that you started 2008.
Yes.
Invested in US
focused, right? It was US focused.
Any particular area of investments, or?
No, it was a very general program. We had and have investments in core technologies, in kind of a social media, publishing, digital publishing, etc. So it was a general program.
Generous,
I can't say it was specific to a certain segment in the market. It wasn't the idea back then.
So, and obviously, so the way you describe it, it was fully financially focused, right? So to have to test an asset class and have interesting financial returns, right? More than the focus on a strategic investment that can also be of help for the group in terms of technology. That wasn't really the reason.
Yeah, it was more of a diversification attempt.
Of assets. Can you give us maybe some examples of investment? Because I think that can make it more practical, both in the international fund and then the one that is more regionally focused. So we can associate it with the specific portfolio companies.
Sure. You want an example about portfolio companies?
Yes, please.
Sure. So I guess from the international, program side, Indie would be a good example of a company. Scaleup as well. We participated and invested in those companies, which turned to be a huge success. I think on the regional side, we have Coffee which is an application for coffee delivery and connecting coffee shops with consumers. We have AlMarzooq, which is a real estate application, operates in Egypt and will start operating in Saudi and the UAE as well. So those, I would say, a couple of good examples on the regional side as well.
Got it. And I can testify, I was there actually in Kuwait exactly a year ago, and that the business around coffee shop is a real one, right? There is definitely a passion. Kuwaitis and coffee is definitely a marriage.
It is. You know, that's what attracted us to the opportunity.
What are do you have specific KPIs for the two different funds? Again, those are, I think, different financial assets to diversified, but especially in the early stage one, are you also looking for some potential strategic partnership where you can actually integrate also technology of startups within your offering overall, or maybe to improve your internal efficiency?
Well, you know, the purpose of investing in fintech is mainly actually for two reasons. You know, one, investment reasons, obviously, and two, which is more important, invest in a company that offers a technology that the group as a whole, as a banking operation system, would benefit from. And that's the whole purpose of investing in fintech, as everybody is trying to enhance and develop the customer experience and using technology to improve services. For any big organization, developing internally, it might be, I wouldn't say problematic, but I would say, there's a lot of red tapes that you have to cut through to get, an approval cycle, etc. So, but developing with, going and investing with, entrepreneurs who developed a technology that could be used for, to enhance the service of the total group or the overall group. I think that's what we targeted, and that's the main KPI.
Yeah, and I would like to hear your view on the region as a whole. But before going there, the other topic that I would like to address with you as one of the major representation of Islamic finance is going a little bit on, without going too technical, but just maybe for the listeners from different geographies, giving a framework of what's the definition of Islamic finance and Sharia compliant banking.
Well, I mean, for someone who came from a conventional background, I didn't find that starking difference. It's the way you deliver the service, the way you deliver the financing, the way you deliver everything. So there's no money under the Sharia law. You cannot charge interest just because I cannot charge you interest just because I lent you money. It has to be a cost plus financing. So that if you look into the details of the Sharia compliance, investments and financing, you would see that economically they're not so different from the conventional side. It's just the way they're structured. They have to be structured in a Sharia compliant manner and comply with the Sharia rules and be offered in how they're supposed to be offered under Sharia.
Can you give us a practical example, again, in the practical terms, like convertible notes are, especially for early stage startups, the standard, at least in in US, also nowadays in different formats, also in many parts of the world. How would a standard convertible notes that has some interest and specific terms here become Sharia compliant?
Well, I mean, first of all, when we do a convertible note, we, most likely don't charge interest on that convertible note. But we agree on a conversion, on a conversion ratio with the company or the issuing company. That is just taking a step back. A convertible note for a startup is an equity, as you know. It's not. It's issued under a convertible note name just to quickly go over or quickly raise money from insiders and then convert it into equity when the round comes. So the intention of that convertible note is not to lend money, rather than it's let's say an advance equity or shareholder loan, which makes it easier. If it's a shareholder loan, then you can convert it with an exchange ratio. So but it's unlike an issuer with a convertible and interest-bearing note, and that's something else. That's something that is cannot be allowed under Sharia law. But in the context of a VC and startup, it's more of an advanced equity before the round concludes.
Got it. And so you basically adapted some of the terms into slightly different terms that do not include interest in lending, but they are very similar to, at the end of the day, the terms that are universally used. Particularly, again, with the world of startups, that is the focus of our audience and conversation.
Correct.
Good. Let's talk about your view of the MENA region. You mentioned that you were probably one of the first ones in 2008 to be active, in particular as a corporate venture capital in the region. And you did mention it was pretty early on and against the flow. What is your take of the innovation ecosystem today as opportunities for the whole region, and who are, in your perspective, the main operators, but also the main opportunities?
I think two things that instigated the entrepreneurship and the startup activity in the MENA region. As I mentioned earlier, the smartphones and the development of new applications. And number two, the legal framework started to change to accommodate and adopt. So it was very difficult to start a company anywhere with pref equity 20 years ago or even 15 years ago. Now you see that legal framework has changed and allows for something like that. And that helps tremendously. Also, cross-border investments within the region. The red tapes has been cut, and the movement of investment are less restrictive. Investing in and repatriating the investment as well. So I guess that encouraged the entrepreneurs across the region to come up with ideas and development. And further to that, some entrepreneurs were smart enough to replicate what's in the international market and positioning the startup to be acquired by one of the international market players. Case in point is Careem and Uber. Careem replicated the Uber or Lyft model, or the ride-sharing model, worldwide, and they were successful with that. So a few years later, they were on the radar of Uber and other ride-sharing companies, and they got acquired because of that. Also Talabat, which are food ordering and delivering platform, they positioned themselves very well and got acquired by Delivery Hero, and that attracted other food delivery company, international food delivery companies to come into the market. So I guess those factors were the main forces to empower entrepreneurs, and that pulled the corporate venture capital investments as well. You don't see much VC funds around the region, but at least corporate venture capital is very active at this point.
It's definitely getting more active. I have to say that we as Mender Bridge, we started operating and support and with a partnership of Brilliant Labs there since probably 2010. So earlier in the flow of interest of the startup economy, right after you started your VC activity, and we can tell that also the culture of entrepreneurship has improved. There are more, as you said, this is driven by success stories, as everything you want to replicate, but you create a generation of potential mentors that you can follow. And that I think that ability of having layers of people that have done it before is probably maybe at the second or third experience that maybe obviously in Silicon Valley has been the backbone of the economy for the last 100 years. In other economies that started later, it's definitely something that I can see improving. And with that also the interest of a layer of investors that are becoming curious in even testing the water of a new asset class that is definitely more risky, but that can also have good potential returns. So I think that in turn has created an ecosystem that is much more mature and much more open to filtering opportunities that are not necessarily just born and raised locally, but it can become global. So that's the other
absolutely
kind of a big step that we see here is also to try to have big objectives, right? And obviously, especially in the consumer market, you need to think big to be able to have big returns. And so I think that cycle of having in front of you other entrepreneurs that were able to think big enough to have then to attract global markets and to global capital is creating definitely a wave of a new professional path as well. Who are also, can you tell us, do you work also with other VCs in the region, or as you mentioned, is mostly driven by CVCs, so corporate venture capital?
I think it's mostly driven by CVCs. There's no, there are some VC funds, but the issue is the size of investments here is still limited. So raising a multi-$100 million fund in the VC world here in the region is too much. It's very difficult to deploy it within 3, 4, 5 years. And you probably know, the latest statistic I saw in the U.S., the average VC fund is about $75 to $80 million. So I'm not saying that there are less, there's no bigger funds in the U.S. in multi-billion-dollar space, but it's it's a much larger market in the U.S. than it is here in the region. So we aim to invest about, we thought that we might be able to deploy $30 million, but 3 years later, we realized that it's very difficult to deploy $30 million in the region, in a good deal at least. We ended up deploying something like $6 or $8 million only, which is a bit disappointing to me. But I guess it's a good start, for an industry that's just starting and picking up. But that level of startup activity I'm seeing is amazing. I'm amazed by it, and I'm really proud of it. What I see, with young entrepreneurs coming and trying to develop new ideas. There's no core technology startups in the region yet, but at least you can see, technology-enabled services or digitizing services in the region, which basically disrupt some old practices or some old methods in doing business across the region.
Very true. So you pointed out some very interesting points that there's not enough opportunities. There are not enough opportunities to deploy a vast amount of capital. But I think one of the major accelerators is also the ability to become attractive also for entrepreneurs to come there in the region. And I see this inflow and outflow. So this cross-pollination is becoming more and more of a norm in the world of startups, so even more now, right, where everything is digital. So really, the location is in your mind. But I've seen also great opportunities in specific areas, in the regions, and some of the countries, even in GCC, being very active in trying to attract international founders, but to come and deploy their ideas locally, right? And then we're just talking to the expo now in Dubai. That is obviously a big window of the region, but Bahrain is doing plenty to try to attract Kuwait, obviously. So I think there is a certain appetite in opening the borders, not just to go and learn and to go and see business opportunities, but also to attract, which I think it might be another great opportunities. Speaking of which, I think the last question that I have for you is more, your glimpse into the future. In particular, if you see some specific innovation areas, both for the region and as a consequence, maybe that KFH is looking at or is betting on.
Well, we're still looking at the Fintech world. At least, this is what we're focusing on now. There's a lot of disruption in the financial and banking sector in terms of technology. And we see that wave taking place in the US and Europe. And I think it's just a matter of time until it reaches here. So focusing on fintech and being part of a big financial group, try to seize opportunities to enhance service and change the way financial services or banking is done is something very important. The only caveat here is whether it's outside outside the region, US, Europe, or anywhere else, the regulatory framework for such fintech still, I wouldn't say lagging, but have different views about a lot of the fintech developments that's going on. My sense is, we will see a lot of disruptors in the future. The way people are banking is changing. The way people are managing their investments is changing. My very first job is done by a robot now. So, that could, you could see, how where the world is heading. So I guess, not catching the development wave would leave you behind.
Absolutely, and definitely, I think the regulatory framework would follow, right? A flow that is inevitable, and with flow also comes better efficiency and big opportunities, as we see in the evaluation of some of these big fintech that got started maybe just only 5 years ago. So correct. that will be probably the next big opportunity and an exit and success stories of the region. So we hope so. Abdulaziz, appreciate your time and your views. So hopefully we're gonna meet in person in the future. But for now, thanks again and take care. Bye.
Thank you very much, Marco. Pleasure meeting you.
Bye. Thank you.
Take care. Goodbye.